All right, here is the stock market. 1 to 3 month view of the SPY. And you can become a level 2 member and get the SIR daily snapshot. It's the full analysis on everything I'm going to show you here, but on the S&P 500, NASDAQ, and Russell, cycle analysis, projections, all of our charts, all of our proprietary studies, and more. All of that every single day, and you can get that by becoming a level 2 member, and I'll show you about that in just a moment. But let's go to this SPY chart right here. This chart is the SPY looking back now for about a year and a half. And of course, that's to the low right over here that was made on the pandemic, right down over here in March of 2020. Now, what we see in here was this giant rally where the S&P 500 moved up to its high of about 480 on the SPY. What we have on the bottom are cycle brackets, and these are simply a drawing tool to help us understand the energetic money flow movements in the markets. The actual cycles are these lines up here about how they resolved. So if you look at this cycle right in here, you can see how that was a 27-week cycle approximately, and that's the averages of 27 weeks. Here is the next cycle here, and you can see how they resolved. Moving up to the peak here in the everything bubble. We had the bond market bubble as we had ZIRP policy. We had the stock market bubble as the economy and earnings were massively inflated by government Fed actions and massive spending. All of that lifting the stock market to a valuation of about 200% of GDP, historic, and the everything bubble and the ridiculous prices that people were paying for things now moves into the Great Reset phase 1. And that's where we are right in here. Let's follow this cycle low right there, and you could see the vertical lines where these cycles actually bottomed. Remember, these are just average ideal cycles, and where this bottom came right over here was a little bit later than would have been anticipated, but still you can see that below is very clear. So let's take a look at how this top formed right over here and where we are right now. So this cycle right over here should have bottomed right about this area. It was almost perfect. And this cycle finished lower than it began. So you could see here, this cycle, which made a higher high, and this cycle, which made a higher high, formed a left shoulder and a head. And as this rally came right over here and it failed early, that's what's called a left-hand translation, it set up the decline all the way to the bottom of this cycle right over here, which ran about 3 weeks long, and that is well within the principle of variation, normal variations in length. You could see it failed in resistance here, failed in resistance here, failed in resistance here, all of those. And these yellow ovals are where 2 cycles were coming down, giving you the biggest downside risk. And that is out over here, again coming in sometime mid-January through sometime late March or April, where it is expected that the market will have a very sizable decline. This bigger cycle right over here is a 36-week more dominant cycle, and that comes down into that same time frame also. This period here will have 3 cycles moving to the downside. That's all energy of liquidation during that period, and that is set up to give the market a very sizable decline during that period. So you can see that each of these cycles got to a lower low. This one had the market from its peak down 14.4%. This one in the mid-cycle, 24.4. This one, 27.4 on the S&P 500. And we're projecting a 30 to 35% loss in this bear market sometime out in this late winter or early spring period for the market. But where are we now? That's an important question. Let's just look at these cycles right over here. And we had talked about the bottoming coming and the potential for a market rally out into the fourth quarter. And that is what we are getting now. This rally that we have is getting up to the first resistance levels right there. We thought it could get up to near this level right here at that major 38%. That's about 391. There's a minor resistance here at about 390. So you could see 390, 391 is the beginning of this resistance area. Now, we would expect that it would easily get up here, and this is the bigger cycle pushing on the upside. That is the 400 level, or 4,000 on the S&P 500, with this projection up to about 405 in SPY 4050 in the S&P 500, up to that level right there sometime out in January. So we had looked for this to be a favorable period, and it is. There are these minor supports right in here that don't seem to be in play right now, and those are rising as the stock market rises here. So we would look for the stock market to easily get up to this 391 area, and maybe through that in the next week or two up to this 400 level on the SPY. And then there's this minor declining period here out into December. So sometime in here, get a peak, maybe in mid-November, late November, come down again into mid-December, and then make this final move up in here into January. I'm following the minor cycle right in here. When I tell you that, I'm giving it strength to the dominant cycle. Now, momentum you can see right over here. When the momentum turned negative right there on the slim ribbon, I'm sorry, on the reversal scout, this is our proprietary indicator for our weekly charts and longer. This then moved down and set up this big decline. You can see in here where it turned up, it set up that advance. It is just trying to flatten out here. So this market still has work to do before it does move to the upside. Now you can see in these cycles where it does turn up, like right over here, and that moved you up during that a big advance. Right over here, that's where it only moved up a few more weeks to the left-hand translation. Right over here gave you that big advance. So this needs to turn up pretty soon. Now, the shorter term information that I'm going to share with you right now is really proprietary and available to our level 4 plus members. But I wanted you to see it, level 4 and level 4 plus, and that is our market monitor. So I'm moving that in here right now so you can get an idea of the market conditions. From right to left, this is the most sensitive to the least sensitive right over here. Our reversal scout, our slim ribbon, our option bias indicator, and our market condition indicator. And we talked about in the last couple of weeks with our members that this was shifting to the positive side. And as you can see, the reversal scout for the SPY, QQQ, IWM, Dow Jones, the Dow Jones Transportation, and the FEZ, the European high caps, all positive. You can see right over here, everything but the QQQ turning positive. That is neutral. And of course, we have the QQQ as weaker. Our option bias indicator has a lot of neutrals in here, and this is leaning more towards the weekly conditions, though you can see that the European is already turned positive. And this is the market condition indicator, which when it gets under minus 25, it then gives you a very negative signal. And then when it gets up between minus 25 and plus 25, it gets into the swing zone, and it has to get above plus 25 to turn green. And you can see in here, because this has longer term indicators in there, that it is not turning yet, and it may not be able to get really good, strong upside indications during this period over here in the market. But as these things began to turn, of course, our members that have this were able to see that, and that's important information to be able to see how the momentum conditions are changing. And the reversal scout gave those first indications, and that would have been on the shorter term daily charts. So what we see now is an improving momentum condition overall on the shorter term, and not quite yet over here, and that has work to do, which we think it will be able to do, and then turn up in here for a while, because as we said, we don't think the top in the stock market comes until sometime late December to mid-January. And then probably mid-January. Late December probably is too soon. And then getting into this very risky period where we think that there will be a very serious decline, where the stock market likely will give up from 400 or in that area down to below this area right over here, which was that last low on that important major 50% fib at 350, probably getting down here to about 320 in that period. So this is a 1 to 3 month view, yet I'm taking it a little bit further, 4 or 5 months, because these are really important areas right over here. This is normally things that we would share with our members, of course, going out that far because it's a little bit bigger picture, but we're getting in an important time frame now, and I want you to want to be an askSlim member. So I'm giving you more and showing you more so you could see the value of the great things that we bring. And you can have, as I said, all of our analysis, full analysis on SPX, NDX, the Russell, cycle analysis, projections, studies, everything, and be able to get that every single day. Matt does an unbelievable job on that. And I want you to sign up right now if you've never been a member. This is the final week for our level 2 trial, special 50% discount. You're going to get everything on this page for just $29.50, and it's non-recurring. We're going to give you a month to look at it, and that includes, if you want to go through more than 600 videos in our video library. It's incredible in 10 categories. That I know you will never get through that in a month, but the evergreen videos in there, which are more than 300 in that video library on tools for techs or trader psychology or style, strategy, and plan, things that traders and investors really need. You'll spend forever on there watching that. So stock index report live stream. This is a live look at the S&P 500, NASDAQ, and Russell with 15-minute charts and the important resistance levels, support levels, and acceleration zones so you can catch those bigger trades. Fantastic. You'll get the daily stock index report, enhanced snapshot on all of the indexes, and be able to see all of our analysis. You'll get our live chart streams on the S&P 500 with multiple time frame analysis and those proprietary studies I just talked about. You'll get the stock market weekly ETF review, our simulator momentum tracker with over 1,000 symbols on there, and it's for investors and position traders with our built-in algos. Future Speak show on Wednesday, 24 different futures and indexes, weekly and daily charts. Arvi does a brilliant job on that. You'll get a complete video library, our workbench with all the trade planning support that we give, and Discord access to see what our analysts are talking about live. Just unbelievable. It's too much to show you all here. I want you to go make sure you take a peek at all of the videos that we offer in that library. You'll get a good idea and everything that we have here. Go to the top of the askSlim page. Click that Learn More button, and it will give you great illustrations of everything that we're talking about here for $29.50 non-recurring. This is not going to recur. That's what it means. You're going to have to decide whether you want to stay after that or it's just going to expire. You don't have to do anything. Sign up right now for $29.50. Any questions, write to Matt at askSlim.com. Just fantastic information for you.